Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Now today I had an oil short trade. Yesterday, a long squeeze, short squeeze going long off the low of the week. And today we're going to go and look at the different pairs. We're going to talk about some really basic concepts. I think, it's really important. Some emails about the day count, all of these things. And I think traders are making things very complicated. I want to state something in that if you don't have a setup or if it's too complicated, then I don't even bother looking. It should be jumping out at you one way or the other. Now, I talked about the easiest way to filter out pairs are pairs that have broken a previous day's boundary. Once they go outside of this boundary, it can be a ripe area when the next session begins, especially for me in the U.S., not necessarily in London. We may be on the front side of a move still where this market is going higher, and the U.S. may be an ideal candidate for a trade back at least to the breakout, depending on what day it is. Now, let's go back to simplicity. Monday is day one. So that's Friday, and Mondays are day one. Let's say Friday was a down day that reversed into the close, and that is the low of the week. If Monday is an inside bar or a day that pops the high of Friday and closes back inside, this is the low of the week. We can start our day count, day 1, day 2, day 3. And I want you to just pay attention to this. In a 3-day cycle, a 3-day trading cycle. Let's rephrase that. A 3-day trading cycle, okay? Now, what that means is this. When you come to the start of the week and you're neutral, you don't have any skin in the game, and you have you're just coming fresh to the market. What that allows you to do now is to look at this and say, okay, on Tuesday, which is the second day of the week, so again, second day of the week. That's our second trading day, okay? That may allow us to form a thesis that this may give us a day 2 trade on the third day of the cycle. Day 1, day 2, day 3, and they may roll this over to the low of the week. I have no idea. They may break higher and come back inside and put a low of the week in. Day 1, day 2, day 3 reverses and pulls back inside, but day 3 can still resume the trend. Now, this may be a high of the week trade in Asia, but it may be a buy in the U.S. session on day 3. Day 1, day 2, day 3, because that's the high of the week. So we're trading from the low of the day on day 2 back to the high of the week in a 3-day cycle. A 3-day cycle. So they're two totally different concepts. That's important to understand, because if you're sitting there going, well, I sold the high of the week on day 2, why didn't it work? Maybe because it's the third day in a 3-day cycle and it's actually a buy-low setup on day 3, taking out the high of the week. In the new week, this forms the low of the week, and they're still maybe putting in the high of the week. Now, we could have a 3-day setup in the current week that, if we go back and put our Friday in there, we could have a day 1, day 2, day 3 that breaks down and breaks structure, a Thursday pullback or retest, and a Friday trade back from the high of the week to the low of the week. Friday put in our low of the week. We had a break in structure on Thursday, and it rolls over on Friday for a trade all the way back through the low of the week. Now, I'm not going to, keep going over that, but I need traders. It's up to you whether you pay attention to it or not. Completely irrelevant. But if you get a high of the week trade after they've broken structure on day 3 of the new week. This could be an inside bar. Great question again. Do you restart the count? No, I don't restart the count. The inside bar could be a trap. They could be triggering longs on an inside bar. So this is day 1, day 2. Day 3 could be an inside bar. They trigger the longs on day 4, break structure, and roll over on day 5. They stop out the shorts, they trigger the longs, then they stop them out, and then it pulls back and rolls over for a Friday reversal trade back to the low of the week. I don't know what they're going to do, but you have to be able to think. You have to be able to look at it and understand who is in the market. If they break the high on day 1, who's in the market? Who? Longs or shorts? Really simple question. Who is in the market? That's the question you need to be able to answer for yourself each and every day. So, if I'm going to short something, essentially I want to know that the front side has broken, meaning that this initial move, whether it's on the day, in the session, whatever, it's going up and I'm at the high of the week, the high of the day, the high of the session, whatever. I don't want to short it right here. I don't want to short it there because I'm at the high, because they could go up again before breaking down. Break structure, I want to short it on the backside of the move. Really important to understand that. If I'm going long, I want to go long when the front side is broken. So again, we could have a market that's at the low of the day. It breaks the low. Traders want to get in long. The market breaks the trend line, retests, and keeps going lower. Puts in a low before resuming. This break of the trend line is now our break in structure. Same thing on the downside. Break in structure. That can happen on a Monday to Friday chart. It can happen within a 3-session chart, especially in the timing window. Now I want to talk about this as well. We have markets that have been trending, making new highs. They're slowly sort of zombieing their way higher. And traders have asked me, what was wrong with not shorting that? Well, taking, S&P or whatever. And there's nothing wrong with it. There's nothing wrong with it at all. The pound yen, euro yen, the Aussie yen crosses are trading in a trading range. They're making new highs each day, but they're giving short trades as well. They're giving great long trades in Asia, and they're giving short trades at the high of the day. They're in a trading range from high to low. They're making new highs, but they're still in a trading range. The US dollar crosses have been making, pound, euro, Aussie, they've been making new highs, and we're up at the high of the week. That is not my ideal candidate for shorting. Don't get me wrong. Yes, they're going to come back at some point, but I was looking at oil specifically this week because we're in such dragging, trending markets that are going higher. They're going higher. I foresee that I'm shorting into strength or shorting into a market that is yet broken. Oil, on the other hand, had a great big move up on Friday night that rolled down on Monday. We took out the low of the week and gave a beautiful short squeeze setup on Tuesday. That market then proceeded to push higher. 1 push, 2 push, it broke structure. 3 pushes back into the high, and on our shorter time frame, we have traders who are trapped. That's my low of the week. That's my high of the week. Where are they going? Now, I repeat this over and over again, and I'm going to say this with a bit of, kind of reality check. I said this to a trader. What are you looking for? What are you looking for? I'm looking for stocks or shares or currencies or commodities that if I'm going to short them, the best opportunity I have is if it's already broken down. Which side was hit first on oil? The low of the week. Who is in the market? Shorts. Yes, they're trapped. But guess what? My trade yesterday, the short squeeze, is in the money. They've done 3 pushes into the high. They've broken structure. Where could they be going? Where might they be going if it breaks down? What do I need to get in? I need them to pull back and fail. Who's trapped if it falls away? All of these traders who are in the market long, and they're coming back maybe just to get me, but they could go back to the low of the week. high of the week, low of the week. That's as simple as it gets. I'm looking for opportunities where I have the largest and cleanest chart to have asymmetrical risk reward. So we have Monday on oil. Monday was a 3-peak formation. So I'll emphasize this for traders. This is an hourly chart. This might make it easier for people to see. Count the pushes. Count the pushes on the chart. We have a market that has a low in the U.S. window just prior to the close on Friday night. Right as soon as the day begins, we have one push up that breaks down and takes out the first hour of the day. 2 pushes and breaks down lower again. We have a market that's making lower highs and lower lows. We then get a market that in the U.S. window pushes a third time and pins up into the shorts at the New York Open. 1 hour, 2 hour, third hour open, which is why I emphasize to traders to pay attention to the time rotation. My chart is about identifying the setup. The 1-minute chart is about getting into the market as best fill as possible and to keep my risk as tight as possible. Now let's zoom in on this. They come down and they trade down low on day 2 at the low of the week, the low of the month for November. I'll just double check that. Low of the week, yes, low of the month for November. Okay. We talked about the consolidation, the breakout pullback, the peak formation. Markets only do 3 things. Okay, I repeat this over and over again. They trend, they false break or reverse, or they're in a trading range between high and low. That's it. That's all they do. That's all they do. Go back and watch my video about the 5 days. Day 1 sets the high and the low for the week. Day 2 expands the range. We have a consolidation that breaks out and pulls back. That's a false break. They then get traders to short into the peak formation low after taking out the low of the week and the low of the month. 1 push, 2 pushes, 3 pushes right at the New York Open for the explosive short squeeze back up into the traders that were short on Monday. Day 1, day 2, low of the week. Day 3 now, we have 1 push right at the beginning of the session. We have a second push that breaks structure in the London window. Now here's a question. If I want to target the high of the week or the low of the week, looking for the money, we've already hit the high of the day in London. Who is in the money? Who is in the money? We broke structure on the downside. We have traders in the money in the London session. Who is in the money? 1 push, 2 push, 3 pushes right into the open of the US window. I'll zoom in on this in a second, but I want to repeat. There's the high of the day. There's the low of the day. That is our consolidation. The Asian window slowly ground its way down on the front side. London traders had the opportunity to go long after it broke structure and pulled back. Where is the volume trapped on this chart? Up in the upper half of the box. We went back up into the high in the gap time and they broke down again. Where's volume trapped after that? Up top. The market then proceeds to auction up in 3 pushes into the open of the US window before breaking down on the front side and going on the back side, heading into our US Open 12 candle window. Where is the money? Now, Al Brooks talks about H1 setups, everything, but this bull candle on the 3rd push, if they break the low of that candle, this market is going into free fall. That's our 3rd push. Where are they going? They're going to go down and get the trader who's long in London. Why will they stop there? I'm in the money from yesterday's short squeeze. There's money at the low of the week. Why would this market all of a sudden just reverse on a dime and explode back the other way? It's a broken down market. Broke the low of the week and pulled back. 3 pushes into the open of the US window. Great question from a trader. I thought you didn't trade the news. I didn't trade the news. The news was at 8:30 New York time. As I've said before, I will take a first hour trade. And if there's news on the calendar and the trade eventuates, I'll get out of the market before the news. I had my 50 pips before the news. What is the next thing I look for after the news? The first bounce entry. Typically, we will see that either at the end of the hour or into the new hour. We saw that in the last 15 minutes of the first hour. The market then heads into the New York Open. This is an example of where the New York Open will explode as a catalyst to complete the move. So if you're in the first bounce entry, you should be at break even at the break of the low of the day. And then you can either take the money, you can hold on to it, you can take a portion off. But the thesis is that they'll take traders into the low as a catalyst to stopping out traders who were in the money from Tuesday's short squeeze. Now there's a possibility this market could pull back, but we're on day 3, day 1, day 2, day 3. We broke the low on Tuesday of the week. Shorts are in the market. Our directional bias is to the downside because we had a sell high setup trading back to the low of the week. High of the session, low of the week. This is an example of a day that has not broken any daily highs or lows, but our bias is to the downside because we've broken structure and we have 3 pushes into the high of the day. They've already traded into the high of the day. They've broken structure on the smaller time frame and pulled back for our 3rd push right at the beginning of the US window for a sell high setup heading into the US session. Now again, just getting back to talking about the other pairs, oil to me was the cleanest, most obvious, best opportunity to trade. The other pairs are in consolidation. Canadian dollar had 2 sets of news releases, both at 8:30. It's still in a trading range between day 1, day 2, and day 3. High of the week and low of the week. We are down low. We've broken the highs on Monday and Tuesday. But we have yet to, I think, establish a clearly defined best trading setup. The Swiss franc, very similar. We're still down low. These markets are staying very tightly consolidated. Nothing is ranging or moving as cleanly as it was on these pairs. Japanese yen, similar. We both have possible wedges forming on Swiss franc and the yen. Don't know if that's going to eventuate into anything. I have no idea. The pound, as I mentioned yesterday, we still are on the front side of that move, which I know there are traders who shorted both yesterday after the news and then today also after the news. But you can see the difference when you're up high, but you're shorting into a market that is still on the front side of the long bias direction. The euro, similar. We had an outside day or an outside session high low that still on the upside of the front side of that move. The front side. We've broken that trend line, but we're still slowly grinding higher. Not as cleanly defined as the oil chart. Again, I'm just looking for simple opportunities. I'm looking at the US session. Oil, to me, was a perfect shorting opportunity. Gold, same thing. We have a market that's still on the front side of that move, and it's very tightly trading back and forth, although I know there are traders that have been trading that. Again, just not what I'm looking for. We have an explosive move. This market could end up breaking down and rolling over. It could also explode and go vertical. I have no idea. Monday, day 1 longs in the market. Day 2, we had the parabolic setup blowing off on news through the high of the week. We've broken that structure, but we're still essentially in a sideways trading range. And although there's been opportunities, I have yet to feel comfortable that there is something jumping out at me in the open of the New York session itself for a best trading setup. I know there are traders that have scalped the short trade in today's session, but again, I just looked at oil as the cleanest, safest, best setup. I'm looking for certain specific types of setups. NASDAQ, same thing, the explosive move. We had day one longs in the market. Day two, the similar parabolic setup, still making higher highs. We still have not broken structure on the inside of this. However, we may see something happen. We have news on the calendar on Friday, and again, who knows what happens. I'm not looking to try and just catch any move. Again, if we look at the shorter time frame, I think this was super clean. Again, we talked about the consolidation. London obviously locked in the high. This was a clean chart. I just wasn't really that focused on looking at the indexes, but a great example again. London, Asian consolidation. They break out headed into the gap time. London makes a higher high. So the Asian high extends the range in the gap time. They break out of the high, retest it, and break down back inside. And again, you'll notice the major round numbers. Some people's numbers may be a bit different depending on their broker. But we have a market now that breaks down in the news itself, breaks down, and that's what we want to see, because that's what eventuates in giving the A top after the news into the New York Open in a broken down market that's already got the high of the day potentially locked in. They've broken the low on the news. That's our break in structure. They pump it back up into the open of the U.S. second hour. Engulfment, double zeros, free fall. New York Open continues the move back through the low of the day and back down towards the low of the previous day. So I think that's a pretty clean setup. Again, look at the charts. Look at the templates. London auctions up and hits the peak formation high of the U.S. window. It breaks out of the consolidation. They break down after locking in the high. They break down more on the news. They pump up into the peak formation high. And you'll notice again the lower peak formation highs underneath for the short trade at the high of the session, second hour, back through the low of the previous day. And just going back to the S&P, it's a similar chart. The point I'm emphasizing is that these templates that we talked about, the consolidations, we talked about this. Asia sets a high and a low. They expand the range in the gap. They put a higher high in. London breaks out, takes out the peak formations from the close of the U.S. session. That becomes our new high of the day, high of the U.S. day. They break out of that, but they break down. They break back down inside, and they pump it up. I want to emphasize this point. This is a setup. This is a setup. They pump it up. They pump it up. Where does the pump begin? In the gap. Right there. That's the low of the day in Asia now. They pump it up and make a high of the day. They break out and go higher. They trigger breakout traders. They get the London session going long. They come back into longs. They break out again before collapsing. I'm trading in the New York session. Guess what? High of the day is locked in. High of the day is locked in. What am I looking for? I'm looking for the pump for the short trade. Pump it up, short trade. Coming back to oil. Pump it up, short trade. So we're on day 3, and again, whatever pair it is, Monday breaks the high. Day 1 longs are in the market. Who's in the market? Longs. Day 2, who's in the market? Longs. We have longs at the high of the week, the high of the month in the market. They break structure. They pump it up today into the high of Friday. Friday's the high of the week from the previous week. They trigger longs, they pull it back. They trigger breakouts and longs again, they pull back. 1 push, 2 push, 3 push. They roll it over. They lock in the high for the short trade back down to the low of the day. Simple as that. Now, I didn't trade the indexes. Again, I wasn't looking at them. I liked oil. I liked it. Yesterday was fantastic short squeeze. I had a feeling that they might revisit that. And the reason is because of this candle right here after they broke structure. This bull candle. I've talked about this before. That's the anchor point for the pump. If they roll over on this guy, he's done, and there's a big gap all the way down. So, point I'm making is know how to identify the best setups, not hindsight. Me showing you live will never work for you unless you actually have a process to do it live, and then understanding the clock, knowing when you can get in, knowing with confidence to hold on to it or to stay in. Not just getting pips, not just getting lucky, having an actual setup. These are all shorting setups. On the way up, on the indexes, on gold, on the currencies, they were longs. We had excellent day 2 shorts last week on the US dollar crosses. We had explosive trend trades on gold, pound, and euro. Simple stuff. Master the process. Identify the best trading setups and know with confidence what you are looking for. I hope that helps. Keep it simple, traders. Big moves. Again, I'm looking to short weakness. I want to be on the backside of that move. If I'm looking for a long trade, short squeeze, that means they're jamming people in. It's not going anywhere. They're forcing you to sell at the low of the week. That should be your first clue. If they're forcing you to sell it at the low of the day or the low of the week and it's not going anywhere, start thinking squeeze. And then pay attention to the clock. Keep it simple, traders. Huge opportunities, 3 days in a row. Have a great week. Keep it going. Stay focused, 1% better every single day. Keep getting better, and may the markets go with you.